Okay, so this is March 16th. I wanted to do a quick video here on, FOMC and also my funded account with Apex. As you all know, there's some promotions going on right now, so I tweeted on my Twitter. You'll see what I just had tweeted here around Lilu. They have this March Madness going on here, so just give it a try and hope that helps. For my trading, I've had some questions that came up with several traders, a couple of questions. So I just want to clarify certain little things. Hopefully that could help. Here, just want to, by the way, I will always share the main screens and everything on my links here, so that helps. Again, quickly, the one question that came up was tick strike. Believe me, just give it a try. I think I'll have my link on this video as well. You guys should really just give it a try. It's phenomenal. I just have them here. I put them on the tape here. It's very clear when all the stocks are kind of correlating together directionally. Sorry, here. So that's where it is. Coming to my trade from yesterday, the main idea of this, I'm going to add that trade here. That was March 15th. I posted it on Twitter as well. I did a really nice job of, catching really this main idea here, which was the trap, the sellers being trapped here. And then once that occurred, as this market was kind of holding the overnight high from yesterday, I said to myself, should really look for a long opportunity once I see some kind of a trap, and that was the idea behind that trade. I'm just gonna lower the volume here on my tick strike. So here, as you guys hear the ticking, I'm just gonna put it a bit lower. That should do it. And that was the main idea behind that trade, that trap that occurred, and same thing with ES. As that trap had occurred and we were holding the overnight high, I said to myself, most likely the market is willing to go and get a higher price discovery. As for now, looking at NASDAQ between this area that I shaded here, 13,590 and 13,450. I mean, it is FOMC, so a lot of things could occur. Things could definitely structure and all that could definitely be a bit weird because of FOMC being, thin and volatile, and everyone's kind of expecting certain things from the Fed.
Germany's Linda here says the debt break is the rule, not the exception.
And that is Financial Juice. I'm going to try to see if I can just kind of decrease the volume on that. Hopefully that will work. And we've got some volatility here in these markets. I think some news came out, and I think Zelensky was supposed to be talking as well. So that's been the main theme from that trade. I'm going to add that trade video here right after in this video, so you could just see it towards the end. I'm trying to keep the videos kind of short, maybe 20 to 30 minutes, but it's really not obvious some days, sometimes, because there's a lot more to kind of explain. And I'm trying to go fast because here we've got some good trading opportunities. This is the footprint question that I'm going to get to here, because a lot of people are asking here, like, what do you look for on the footprint and all that? I kind of explain a lot of this on the private coachings that I have with certain traders. But look, at the end of the day, you kind of have to find what works for you, what kind of trader you are. If you want to keep a structured approach, I think having a footprint like this will definitely be useful. As you see here, we saw the passive sellers that are basically absorbing here above 43.20s. Obviously once we get above 43.15 and 43.20, I kind of expect firecrackers, as this market could probably move much higher. And again, today is FOMC, so anything is possible. I mean, nothing really on the structure side could really prevent anything from this market to do. It's really news driven. A lot of stuff around the crisis here is just mostly it's just manchettes, like news and headlines that the markets love, and most traders, or actually investors, kind of always want to see certain things and understand what the market's doing or why the market's doing this. There's no whys and buts. It's a market, right? Or you've got buyers and sellers, and it's where you know, as a trader, you know what the difference is. Now, you see like here we've got definitely some kind of, something going on. Again, look at this: 05s, 010s, 15s, and then we've got 20s. Is this a coincidence that they're just absorbing certain levels? I mean, look, at the end of the day, it's really nothing is the same every time, but I could clearly see that there's some absorption going on and there's passive selling here in this market. Well, for me, my way of trading, I kind of use both. I could be a structured trader, but with the last several weeks, the markets have been pretty thin, and I kind of think the thinness is really because there's a lot of rebalancing in portfolios, asset managers, funds, and firms really kind of, with the rate hikes that are, supposedly coming up. I think there's a lot of volatility because of all that. So, there's kind of a market regime change, and things do change. And as a trader, you have to just adapt to all of that, right? Once again, I'm just going to add the trades from March 15th towards the end of this video, so hopefully you'll be able to see. I just explained why I had taken that trade based off the market profile from yesterday, which I was expecting some kind of a trap to see if that trap would work. And I was just going to ride it all the way to like a new intraday high, which I kind of did, but I scalped it, did a couple of trades, and I was not talking on that trade, so I'm just going to have the video attached towards the end here, and you guys could see how I managed that and basically was able to make really a 3K day within my funded account with Apex. So hopefully that helps. As of today, for the market with FOMC, again, I think holding this area would be some kind of confirmation for me that the market wants to move much higher. Again, much higher would be again in really like decent moves towards these high volume nodes here on Nasdaq, and probably get back into this structural single prints that we had here. I think we need to hold this level to really maintain the bullish sentiment. Again, anything could happen. Jerome Powell could mention anything. I don't know what I think. I mean, they're basically planning to gradually increase rates, which would probably be the best thing to do for the economy, as all this inflation stuff is really heating up. But that's a total subject on its own. So again, a very volatile session should be expected. As you all know, I don't really trade much of FOMC. I mean, you can trade here. It's not that bad here in the morning, but once the news comes out after 2 p.m., things get really wild. And the other question I just want to clarify is for Nasdaq. I use the Nasdaq here. I'm just going to get to it here. Nasdaq footprint that I have. This is Sierra charts. Once again, I basically use Sierra charts for my charting, main charting. This is the kind of chart I use just for my footprint with Nasdaq to see the the liquidity pools, where there were the most amount of volume that occurred, and then some kind of the main things here to really look at was volume and delta, and I think once you get a good vision of how this works, you could definitely use it in your favor. Like when this kind of thing happens, right? We've got delta and a surge of volume. Clearly, there's structurally there's nothing to be short here. You would just want to look into rotations. But if you don't look at footprint, I think the best way to really look at it is on a dome, which you all know I use mainly the dome here for my trading. So I mean, quick example of how I would do that is, I think I was trying to explain this to another trader at some point, and look, you kind of need to box your market, right? You're boxing your market between a certain number of points. Let's say the 38 here is kind of getting sticky, right? Would I sell below 38? I would like to sell below 38 if I can kind of get some more selling, but I mean that's not occurring, so that's not going to work, right? And then it's always about, okay, I was looking at the 38, so once we get back to the 38s, that's my quick trigger to say, okay, what does ES do? And I kind of box ES within 5 points as well, so 43.15s to 43.10s. Look at how the market trades in there. For me to be a buyer above this VPOC here, I'd like to see some aggressive buying coming in, which I'm not seeing here, so I could gradually look for maybe a scalp, quick scalp to the downside here if we were to get some more selling here, but nothing is really occurring. So it's mainly retail. Again, I don't know why, but I have two NASDAQ tapes here. I probably put that by error. I would have to just change this tape here and put yes. I don't know why I did that here. Let me just get that. I think I fixed that here. So I put the ES tape. This is just a 1 lots, and then these are 20 lots and more. So here we're looking for more buying above this 15. I think if I was to go for a short, I would only short bit below the 748s here on Nasdaq. As this market is moving higher, I would not even look to short now. There's no opportunity to look for shorts because I mean, I think by boxing your market here, you're kind of avoiding over trading, And now we've got this big guy that just popped in here at the 43.16s. That's moving the market here. He's stacking, but I think we could most likely get through him. Oh, look at that. The guy just pulled his order there. Wow, that was crazy. I mean, unfortunately, we're not trading that, but these are the kind of things when you see that. And now, the only thing is, I would only put a buy order here at 43.15 to see if I can get another long scalp there. That was actually the overnight high as well. So, I think market now just crossed through the overnight high, and it's not finding sellers, so it's most likely going to go much higher here. So that was the quick, example. And look at the footprint here. What's good about having a structured approach as well is that I've got a battle here. What did I tell you guys earlier? I said that once we get through this 43.15, 43.20 area, all these guys are the passive sellers here are just gonna start covering. And look at the market; it's crazy how it's going higher. So I can maybe just print screen that and share it on Twitter here. Yeah, so the passive sellers that we had there on on the footprint chart, which was very clear, they just bailed out. So we've got a huge squeeze that came here. I mean, again, we didn't trade it, but who cares? Look, sometimes you can't get everything. And look at the delta here; it's just really aggressive. This is a delta here, 10,000, 9,000. Look at it. This is really aggressive here. I mean, I don't know, but I don't think. You could always short, but I mean, I wouldn't really want to short here in this kind of context. I think we're kind of doomed for, a huge squeeze in these markets. Whatever Dalton, I'm not saying Dalton, sorry. Whatever Powell says here, or does, I think it's kind of baked in. Everyone's kind of expecting certain things, and the wording might be a bit different. But anyway, so. Again, I'm just gonna add the video of my Apex trade from yesterday here. Hope that helps. If you guys have any questions, don't hesitate. Also, one thing here is that Lilu has a quick. If I show you guys quickly here, they have a promotion here on March Madness. I think I posted it on Twitter. Yes, I did. So I'm just gonna share that with you guys here. So that's that. You can clearly get a nice little rebate off an evaluation, and my links will always be at the bottom here, so don't hesitate to contact me and go through the links for the subscriptions. Like I said, Lilu, Apex, the main funded accounts that I have, and I believe they are really good. They have great service. I mean, I've never heard anyone complaining about them. I have already had payouts from them as well, so like I said, they do pay out, and it's really legit, so don't hesitate to look into that. Hope that helps.
So just a reminder for you, at 10:30 a.m. Eastern Time, we are expecting the US EIA data to be released. Taking a look first at US EIA crude oil inventories. Forecast is for -1.800 million, previous -1.863 million. US gasoline inventories forecast -1.462 million, previous -1.405 million. US EIA distillate inventories forecast -1.759 million, previous -5.230 million. Just a reminder for you, yesterday's US API crude oil
So Novogratz says there is zero chance that Russians can use cryptocurrencies to circumvent. So Senator Elizabeth Warren is wrong on crypto and sanctions, according to Novogratz.
US crude oil futures settle at 90. So Biden just currently signing legislative act into law, says I will speak more about Ukraine tomorrow. Currently speaking at the federal government funding bill signing event. The US State Department says we have made significant progress in recent days on the Iran nuclear talks. The US State Department says the US continues to assess the mutual return to compliance and would be most effective way to have those limits on Iran's nuclear program.
The S&P 500, upside movement in the Dixie, downside movement in gold as well, downside movement in Bitcoin being noted here as well. That's coming through now from the FOMC. Implications of the Russian war are high uncertainty for the US economy. Inflation levels remain elevated on supply issues and the pandemic. Fed median shows unemployment rate at 3.5% by the end of 2022, 3.5% by 23 as well. Fed officials see the Fed for the end of 2023. Fed citing the Ukraine war may create inflation pressures and slower growth. Forecast sees inflation at 4.3% by the end of 2022 and 2.7% by 23. Fed raises its Fed raises its IOR 25 basis points to 0.4%. Discount rate increased to 0.5% as well. Fed forecast rates at 2.8% in the end of 2024, long run cut to 2.4%. So again, Fed forecast rates at 2.8% by the end of 2024. Treasuries steady after the Fed announces their quarter point rate hike. Fed-linked OIS increases the amount of tightening priced for 2022. Fed officials, they see the Fed funds rate at a median of 2.8% by the end of 2024. FOMC states that indicators of activity and hiring have continued to improve. The Federal Reserve changes the Fed's fund range to 0.25% to 0.5% there, as we just saw released. But officials see the fund target rate at the median of 2.4% in the long run. So the Fed officials see the Fed funds rate at a median of 2.4% in the long run.